hiring in the month of February slowing far more than economists were anticipating. Private employers adding just 77,000 jobs during the month, the smallest level of gains since July, according to payrolls processing firm ADP. The print fueling concerns of an economic slowdown as worries about growth that President Trump's tariffs could cause. Joining us now with more, Jennifer Lee, BMO Capital Markets senior economist and managing director. Jennifer, great to have you on here. What would you say is the current status of the labor market? Is it slowing or has it already hit a breaking point?
Good morning, and thank you very much for having me on. Well, I guess if you're just looking strictly at the ADP numbers and some of the employment surveys out there, or the components of different surveys, you think that you'd say that it is slowing, and it probably is. We have already been seeing this slowing pace over the last little while, and I think we're kind of seeing it build up a little bit more now. But it's more in anticipation of what could happen. There's so much unknown out there about what will happen with tariffs, how much of an impact it's going to have on the economy, and certainly on inflation and consumer spending, and all that feeds into what consumer or businesses are going to be doing on the hiring front. I mean, all in, like broadly speaking, when you take a big step back, we're at a pretty still, up until now, healthy labor market for just over 4% jobless rate. Don't forget, we still have over 7 million vacant jobs out there. So it's still a lot of jobs to be had. So I think the labor market is still in decent shape right now. But again, things are slowing. Given all this uncertainty over tariffs, what the impact is going to be on the overall economy and spending and inflation and all that. So I think businesses are probably holding off a little bit until there's some more certainty on that front. So I wouldn't be shocked if we saw a slower number as well on Friday for the payroll report.
And talk to me, Jennifer, about how that's impacting where it's easiest or hardest to find jobs. I noticed in the ADP data that there was a little bit of a leadership change, that we saw losses in hiring in areas that we typically see growth, like education and healthcare. Do you anticipate that continuing? And if so, which areas of the job market seem safe right now?
So that could be also reflective of potentially these jobs that we're seeing potential job cuts at the federal government level as well. So there could be a little bit of that being reflected. But overall, we're probably going to see at some point, you would expect more hiring in construction, for example, and continuing on in the leisure and hospitality sectors. And certainly potentially on the agriculture front, with all the greatest deportation effort ever, you're going to start seeing a lot more undocumented workers leaving the labor force, and we're going to have to start hiring for those to replace them again in those certain sectors. So we're probably going to see some of that, but I think potentially on the education front, the healthcare front is probably reflective of some of the cuts or no cuts coming in from coming in from the Department of Government Efficiency.
So Jennifer, I just want to end on your feeling on the overall economic vibe. Are we heading towards a potential recession, or is this just another continuation of the vibe session?
I think we are, broadly speaking, I'm going to say that globally we're heading toward a slowdown. We're already seeing that. Just given the uncertainty, our businesses have already started putting the brakes on business investment plans. Again, waiting to see how things fall out and whether or not they're going to stay that way. So we do not see a recession in the U.S. Per se, but it will be hit by higher prices, higher inflation. That's probably going to be the first impact of all these tariffs. We did knock down our growth forecast to just under 2% growth for the next couple of years, from over 2% growth. So that has knocked out. Still going to be growing, but other areas such as Canada, we do have a mild recession penciled in, just over 0.5% growth over the next couple of years. So for the U.S. specifically, there will be a slowdown. There already is. We're already starting to see the signs of the slowdown, but it's probably too early to say that there will be a recession.